no longer be legal tender from midnight onwards.
On the 8th of November 2016, the Government of India announced that 500 and 1000 rupee notes would be invalidated. Overnight, 86% of the currency in circulation was cancelled. The goal? To deal a financial blow to the black economy. A year later, was it all worth it? Watch the demonetisation experiment on the 8th of November with Ira Duggal, only on Bloomberg Quint.
Markets erase early gains to trade marginally lower. Oil marketing companies decline over 2.5% each as crude rises to its highest in 2 years. It's a stellar rally in Asian markets. The Nikkei is closing at its highest level since 1992, while the Hang Seng is at its highest in a decade. HDFC Standard Life's 8,700 crore IPO opens for subscription today. And a year after demonetisation, Harvard economist Kenneth Rogoff tells Bloomberg Quint that he was surprised the hit to the economy was not more severe. Indian used creative means to keep businesses going, says Rogoff. Conversations coming up on the show. You'll hear that full conversation with Kenneth Rogoff. We'll also get a view from Saurabh Mukherjee, who thinks that the quality of QIPs coming into the market is declining. And Joe Rundle of Think Markets will tell us what he makes of the global markets. Up and away is the direction for those markets. But let's start with a check on domestic markets. You're slightly lower, about 1/3% lower on the Sensex and about 1/4% lower on the Nifty right now. Neeraj Shah is joining us as always with a check on the markets. Neeraj.
Yeah, the banks are down too. Reliance is down as well. I think all of these factors. So some heavyweights pulling the indices lower in today's session, despite the fact that technology is doing exceptionally well in the session today. And those are no mugs. I mean, they cumulatively, they contribute quite a bit to the Nifty in terms of weightage. So that's the standout feature really, a soft day of trade. But look at what technology is doing. HCL Tech leading the chart, by the way. But HCL Tech, TCS, Infosys, Wipro, across the board, we're seeing a bunch of technology names garnering a lot of moves in the session today, and that's happened at the broader end of the spectrum as well. Interestingly, while crude has done what it has done, HPCL is in the green now. A lot of talk about the valuation of the deal with ONGC and whether that will have some play out here. But otherwise, you don't normally see OMCs being in a green in such a big way, but there's some buying that we're seeing in HPCL in the session today, 439 and counting. Let's wait and watch. Keep in mind, this one may have a slightly different chart or a chart its own course slightly differently compared to the others by virtue of the deadline of the ONGC deal as well. So a bit of a pullback into HPCL in the session today. Speaking of oil, I think oil exploration companies have done extremely well in the trade today. 2 or 3 names that I saw, smaller ones, have done reasonably well. So the likes of Alpha Geo, non-oil exploration but oil-connected Asian oil fields, and a couple of others haven't done too badly. HOEC is up about 9% as well. So big moves that have happened into some of these oil exploration companies. NBCC has gained quite a bit, Engineers India too, but NBCC has the trigger of the Bank of America Merrill Lynch report, and that one is up about 7.5%. So good going. Look at the volume picture there, about 11 million shares. So pretty good going out there as well. So save for banks and Reliance Industries, which has come off today. I think the market cap is now sub 6 lakh crores. That one is seeing some pain, and that is dragging the index down as well. Top contributor on the Nifty in terms of the downtick, and the top loser as well. So Reliance Industries is particularly having a slightly tough day in trade.
All right, Neeraj, thanks so much. That's the structure of the equity markets this afternoon. Switch focus to the bond markets and the currency markets as well. Bond yields continuing to inch higher on Tuesday. Last I checked, the 10-year benchmark yield was trading above the 690 mark. Yields are now trading at a 6-month high. There have been a bunch of factors that have been pushing them up. The currency markets also, before we get into a deep dive on bonds, have started to see some weakness on the rupee, perhaps as a consequence of the higher oil prices. But let's bring in Nupur Acharya of Bloomberg News. He's with us to help us understand what's happening in the bond markets. Nupur, I think now we've had a series of sort of negative triggers for bond markets. They've reacted and yields have moved up.
So clearly the recent surge which Neeraj was talking about, the surge in crude oil prices, the timing couldn't have been worse. We already have a very hawkish view on inflation coming from the RBI. The growth is slowing down. We don't know the outlook for the rate cuts looks very, very uncertain. At this moment of time, you have a surge in crude oil prices. And let me simplify the math for you. Every $1 rise in crude oil prices will mean import bill going up by $1.3 billion for India. So that's quite a lot of money. And now the question is on the government. What will the government do? Number one, it can absorb the cost and risk derailing its fiscal discipline. Or number two, it allows the oil companies to raise prices and let RBI fight inflation. So it's a pretty negative mood in the market right now.
All right, Nupur, thanks so much for that. That's the bond markets, negative mood in the markets. I'm cutting that conversation short. There's news coming in on Lupin in particular. Let's try and pull up that news. The stock has suddenly plunged. We will get Darshan in for details. Darshan, some sort of a warning letter from what I can see on the flashes?
Come in on the exchanges right now. What the Lupin has indicated is that the US FDA has given them a combined warning letter for two of their biggest plants, that is the Goa plant and the Indore plant. Now what will happen, what a warning letter means is that the future approvals will not happen from this plant. Over the past few months there was Lupin, the general street consensus was the fact that the plant issues at Lupin's Goa as well as Indore plants have been cleared. That is what the management also has been indicating, that they are looking to resolve this. Now this has not happened. What they have said is the fact that they have received a combined warning letter for them. They had 3 Form 483 observations in their Goa plant on the inspection that was conducted in April 2017 and 6 Form 483 observations on May 19th, 2007. Now post this 483, it gets converted into a warning letter. What a warning letter means that the existing products can be sold by Lupin from these plants, but no new approvals will come in. Now the US FDA will take a decision whether now Lupin will have to go back to the US FDA, get all the remedial measures done, and then actually go ahead and get this cleared. There is a high chance that if the US FDA is not satisfied with this, this can get converted into an import alert, which will nothing from this plant can be sold. Extremely negative for Lupin. More than 50% of their US sales happen from these two plants itself. So extremely negative for Lupin. Now they will have to go back to the drawing board and get stuff done. So we'll try to get the management comment on what exactly is happening. But this news is definitely comes at the worst time for Lupin, when sales are not happening, when competition is excess, they're losing market share in their products. This couldn't have happened at a worse time for Lupin.
All right, market taking note of that. Stock down almost 10%. I'm sure we'll try and get the management as and when we can. But let's move back to other news. In the primary markets, it's the HDFC Life IPO, which is in focus. 8,700 crore offer for sale, open for subscription early today. The early subscription numbers are quite thin, but it's just the first few hours or so. Somit is standing by with the details of the issue. Somit, over to you.
So HDFC Standard Life is looking to raise as much as 8,695 crore rupees at a price band of 275 to 290. Now at the upper end of the price band is 290. The market capitalization of the company would be more than 58,200 crore. Now in this is a complete offer for sale where both the promoters will be diluting their stake. Now the listed NBFC, that is HDFC, will be diluting 9.5% of its stake and will be gaining around 27 times its investment done 17 years back. Now the UK based Standard Life would be selling 5.4% of its stake and getting around making around 7 times its investment in the same time period. Now the life insurer has more individual products in its portfolio and it sells most of them through banks. Now it has around 125 bancassurance partners which contribute around 51% to its new business premium earned in financial year 2017, and it also generates 40% of its revenue from direct sales and the remaining through agents and brokers.
All right, how do they compare Sumit to the other companies, other listed insurance companies?
If you compare HDFC with other listed peers, it sells around 35% of its, it gets around 35% of its new business premium from linked plans, which is less when compared to ICICI Pru and SBI Life. Now, for an insurance company, it is the linked plan which is more profitable when compared to the non-linked plans. Now, if you see the company's solvency ratio, it's close to around 1.9 times, which is ahead of the regulatory requirement of 1.5 times, but below the but below its peers like ICICI Pru and SBI Life. Now, the persistency ratio, which means how many customers the company was able to retain after 13 months, for HDFC Standard Life stood at around 81%, which is at par with SBI Life but below ICICI Pru. However, when it comes to 61st month, that is after 5 years, HDFC Life's persistency ratio was better than ICICI but below that of SBI. Now, if you see the claim settlement ratio for HDFC Life was highest at 99.2% among the private players, and its total premium also grew at a faster rate when compared to ICICI Pru and SBI Life. The total premium earned grew at a compounded annual growth rate of 14% over FY13 to FY17 compared to 10% of ICICI Pru and 10% of SBI Life. Now, the return on equity for HDFC Life was around 29%, while ICICI Pru was 31%, and for SBI Life 20%. Now, the company's embedded value was more than 14,000 crore, which is again lower compared to ICICI Pru and SBI Life, and also the asset under management was lower for HDFC Life when compared to ICICI Pru and SBI Life.
All right, Sumit, thanks so much for that. That's the HDFC Life IPO. Now, on the charts, if you look at the interconnect between equity market performance and large IPOs, you get a sense that equity markets don't perform all that well in the immediate aftermath of large ticket IPOs. Shantanu Chakravarti of Bloomberg News is with us. Shantanu, you've been looking through the charts. What do they show?
They are showing that Nifty tends to correct in the region of 10 to 12% after a big IPO in the next 1 to 2 months. And this has been proven true in ONGC, Reliance Petro, Reliance Power, and most recently in ICICI Prudential Life. So we are also looking at a spate of new IPOs coming in, 5 insurers listing in the spate of 2 months.
Okay. So as the basic thing that your charts are showing you is that when you have large ticket IPOs, the equity markets tend to correct, usually a liquidity driven phenomena. Thanks so much for that, Shantanu. Let's go back to Lupin. I think Darshan is standing by. He's got an analyst on the phone line to try and understand the implications.
Okay, we're joined by Cinderella from Daulat Capital. Cinderella, let me first start with you. How important are these two plants for Lupin? Goa, give us an individual breakdown. How much does Goa contribute to the top line and the bottom line, and how much does Pithampur contribute?
No, dear, I won't be able to give you an exact breakdown as such, but both these facilities are very important facilities, and I mean the management had just recently highlighted that they were expecting an EIR coming in very soon. It's a very, very disappointing thing. We had even done analysis of their Form 483, and they were not looking so serious to come up with a warning letter. But we'll just have to wait and watch the warning letter. Yes, in terms of, if you ask me, the line should be somewhere around 15 to 20% kind of a contribution that might be coming via these facilities put together.
You're saying 15 to 20% on the total top line, you're saying?
Yeah.
And for the US business, how much will that be?
US business only I'm referring to, not the total as such. These are the US facilities.
Okay. Which were the important products that were filed from these facilities which can now get hampered?
So all the future approvals which we've been waiting, if you recollect that there have been no approvals coming in for Goa since last inspection, which was in May. So since then, there has been not even a single approval which has come. So many approvals which have been delayed, and now there will be further delays to all those things. So it's fairly disappointing. No words to say.
Were you expecting this? Because
no. Nobody on the street would have accepted.
Is there a chance now for an escalation to an import alert now?
No. That looks very, very vague. No, at least some WL import alert will not happen. That will not happen.
I'll just get back to what you were saying. So what did the management say in the conference call post the earnings in terms of,
They were expecting an EIR along with us. I guess most of us were expecting an EIR for the facilities to come soon. That's what we were looking forward to. But this is really
Okay, many thanks.
really disappointed.
Yeah, many thanks for that, Cinderella. And as you can see, the counter is down almost 13%. Extremely severe. No one in the street had anticipated this move to come in. But a warning letter has come not for one, but two plants of Lupin, which means in a time where competition is killing them, where pricing is killing the entire pharma industry, getting a warning letter for two of your best and biggest plants for the US market, it certainly is a big deterrent. The counter is down almost 14%. Probably, I don't know how much more lower it can go, but that's the big negative that's coming in on Lupin currently.
All right, that's Lupin for you. We're staying with stock-specific news, and this time moving to RCom. In RCom's case, it's not just stocks that are trading lower, but also bonds. Late yesterday, RCom confirmed that they were not going to make the scheduled coupon payment on their outstanding foreign currency bonds. This is a story which has been continuing for the last few weeks, actually. Vishnath Nair has been tracking it. He's with us in the studio. Vishnath, this is a fallout of everything else that has happened. Can you just explain to us where we got to from here?
Right. So essentially, the bond prices have plunged quite a bit. It's a bond that was supposed to mature in 2020, and the coupon payment was due on Monday. There was about a $9.75 million coupon payment that was supposed to be made, which the company has missed. And then later on in the day, the company put out a notification on the stock exchanges. It said that it's not going to pay its bondholders because there is a standstill agreement with the lenders under SDR. This SDR was approved in June, but the plans are still a little shaky because the original approval came in because there was going to be a merger with Aircel, there was going to be a tower deal with Brookfield. Both those deals are somewhat shaky now. Aircel has fallen through completely, but Brookfield, the company, said that it is renegotiating. Again, it put out another notification on the stock exchanges that said that it is renegotiating at this point in time. So if you take in both these accounts, so essentially the SDR is now in jeopardy because now the lenders will have to convert debt into equity in December this year, and they have a standstill till December in 2018. So till that point in time, no NPA classification can happen, but overall still, there is no final plan in place. So we don't know how the company is going to convince its lenders that it's going to be able to repay them under SDR and help them, convert the debt into equity.
All right, so this is still work in progress. Thanks so much, Vishnath, for giving us those details. The news there is that the bond holders are not going to get their coupon payment as scheduled. Not sure if that actually falls technically under the SDR or whether this is just a case of the fact that secured lenders will perhaps not let them, prioritize unsecured lenders. That's the bond on your screen. Prices have plummeted since that confirmation of no coupon payment came through. Let's get into the earnings season. We're still within the earnings season, and we've got Cipla and BHEL to look through. Darshan is standing by with the street estimates on both of those. But let's start with Cipla first, Darshan.
Okay, so for Cipla, we are seeing a 7% growth on the top line. The bottom line growth we are seeing close to almost 13%, and slight improvement in EBITDA margins coming in at almost close to 19% versus 18% last time around. Now, what will work for them? Basically, it will be the Indian markets that will work for them. We are seeing a 25% year-on-year growth there and a 40% quarter-on-quarter growth. South Africa will also be decent for them, 15% growth on a year-on-year basis. US will be where the problem is. It will be rather flat in trade. Now, Cipla has a big exposure to the domestic markets, and because of the GST restocking that will come in, that is where the numbers will actually come up significantly. So the domestic markets will do well. For the American markets, there are no new launches, there are pricing pressure, so that will face an impact. But favorable product mix will actually help them aid their margins slightly better than what it was last time around. For BHEL, we are seeing revenues up 2%, but profits will be up almost 45%, and margins will improve from 2.3% to 3.8%. No major orders have come in, but execution of some of the older stall projects is something that will actually happen this time around. There is a reduction in slow-moving orders that is expected, and a better product mix is something that will aid the margins of the company. Basically, operating leverage is expected to kick in BHEL this time around, and that is what we are expecting.
All right, those are the earnings that are still expected to come. Darshan, thanks so much for that. We also continue to take track of what the earnings season has looked so far. Yatin standing by with the numbers, the heat map of what's performed, what's underperformed. Yatin.
Well, as far as the earnings are concerned, so far, the July to September quarter, we have 8 earnings so far which have come on the positive side, which are stronger than expected. As far as inline results are concerned, nearly 20 companies have, given us a inline kind of a quarter. Strong results are largely on account of margin expansion that we have seen in many of the companies. Of course, the commodity related margin expansion will be seen moving forward as well. As far as 35 Nifty companies which have come in so far, you can see that the kind of earnings beat or inline earnings that we have seen is highest in the FY18 period. As far as 20 companies are concerned, they have reported inline numbers, and probably the kind of disappointments that we were seeing in the previous 2 quarters, that has not been the case in the quarter, probably because of lower analyst expectation, GST transition. We have seen a good beat coming in. As far as the heat map is concerned, look at the companies, especially the auto companies, the likes of Maruti and Bajaj Auto, which have delivered fantastic operating performance. They have seen above estimated results. As far as Dr. Reddy's is concerned, in the pharma pack, they have surprised on the upside. As far as the US business is concerned, the overall margin picture is concerned. Z Tech Mahindra, Indiabull Housing, Bharti Airtel, these are the few companies which have reported the earnings on the positive side, and a whole host of companies like Ambuja Cement, ITC, Infosys, HDFC Bank, ICICI Bank, especially the banking pack versus the market fear, have reported earnings which have been largely in line with the street expectations. However, on the miss side, we have companies in the oil and gas space, especially ONGC and IOC, which have disappointed the street with their earnings quality. Also, the likes of Yes Bank, Axis Bank, because of the divergence that we saw and the NPA issue that we saw, have seen weak earnings growth this quarter. And Tata Steel as well as Bharti Infra, UPL, these are the few other companies which have reported slightly weaker than expected results.
All right, that's the earning picture so far. Views, of course, will consolidate after we've seen the full set of earnings, but some early views coming in on the earnings season. Mahesh Nandurkar of CLSA is not particularly convinced that we've seen the worst. He says in his quote that the Q2 results season has so far seen more results above estimates, but downgrades are still slightly edging out upgrades. The GST transition slowed the first few weeks of the quarter, but most corporates noticed a pickup towards September, possibly due to the early festive season. We still see 14% FY18 earnings growth, followed by 20% plus in FY19, as a low base of demonetization and GST sets in from the December 17 quarter and will extend for the next 3 quarters. That's a view coming in from CLSA. All right, let's move away from earnings and stock markets. A year ago, the Indian government decided to scrap notes of 500 and 1,000 rupees in the hope that the move would hit black money and also push the Indian economy towards greater formalization. The verdict on whether those objectives were achieved or not is still being debated. In an interview to Praveen Chakrabarti, consulting editor at Bloomberg Quint, former Prime Minister Manmohan Singh said that he believes that demonetization has hurt the Indian economy and small businesses in India in particular. Singh called on the Prime Minister to move beyond politics and politicking and start working to repair the Indian economy. Praveen Chakrabarti sums up the takeaways from that conversation.
This week marks a year since the government announced demonetization. In an interview to me, former Prime Minister Dr. Manmohan Singh speaks about the impact of demonetization on the broader economy and the challenges facing the nation as we look forward. Dr. Singh was uncharacteristically vocal in his opposition to demonetization when it was announced a year ago. I asked him, how would he assess the impact of it now, 12 months later?
Dr. Singh says, and I quote, "Slowing GDP is merely one indicator of the economic damage. Its impact on the weaker sections of our society and business is far more damaging than any economic indicator can reveal. One immediate manifestation of the damage has been on jobs. 3/4 of non-agriculture employment in our country is in the small and medium enterprises sector. This sector has been hit the hardest due to demonetization. Therefore, jobs have been lost and new jobs are not being created. I also worry about the longer-term impact of demonetization. Headline GDP may well start to show an improvement after the recent lows, but rising inequality has been a constant threat to our nature of economic development." demonetization may exacerbate such inequalities, which can be harder to rectify in the future.
The government has subsequently come out with other objectives for demonetization, such as a cashless economy or a digital economy. I asked him, how important are these as economic priorities for our nation?
In reply, Dr. Singh says, quote, "Objectives such as a less cash or digital economy are laudable pursuits, but we also need to get our economic priorities right. It is unclear that these goals of cashless economy will indeed help small enterprises become larger and achieve scale efficiencies. That should be our priority. These small and medium enterprises are the backbone of India's economy and labor markets. It is unwise to sabotage this sector in some rhetorical pursuit of a digital economy. Any behavioral change cannot be coerced or forced. It has to be nudged and incentivized, as behavioral economists have found. Digital or cashless economy is a mere post facto justification for what was fundamentally a flawed economic policy."
Economic measures such as GST, demonetization are often touted as hard pills that India must swallow to formalize its largely informal economy. Is formalization a necessary condition for long-term sustained economic growth? If yes, what is the best way to achieve it?
Dr. Singh says, and I quote, "The value created by the informal sector will be captured in the form of income, wealth, or consumption effects. Hence, we must be cautious about the sweeping generalizations about the informal economy and passing moral judgments about the entire sector. Having said all this, it is very important for a nation such as ours to build strong state capacity to lift our standards of governance. This is possible only when we increase our share of tax revenues. If formalization of the informal sector means a widening of the tax base, it should be welcomed. But the means is as important as the ends."
Dr. Singh spoke about the importance of institutions. He is also a former RBI governor. I asked him about the impact of demonetization on institutions of policy making and governance in the country.
On this, he says, quote, "The Reserve Bank of India was bypassed and overshadowed in one of independent India's most significant monetary policy decisions. This is a cause for concern. I am not for a moment implying complicity of the RBI, and I am very sure that the RBI did not have a choice. I am equally confident that the governor of the RBI will strive to regain credibility and independence of the institution. But I am very concerned about the creeping culture of erosion of institutions in other spheres."
Dr. Manmohan Singh famously warned that demonetization could derail economic growth by 2 percentage points. I asked him if he feels vindicated now.
"This is not about vindication," says Dr. Singh. He adds, and I quote, "In fact, I strongly feel the time for politicking over demonetization is over. It is time the Prime Minister graciously acknowledges the blunder and seeks support from all to rebuild our economy. There comes certain moments in a democracy's history when economics should take precedence over politics. It is one such moment now in India."
All right, you can read that full interview on BloombergQuint.com. That's the former Prime Minister on the economics and the politics of demonetization. And we will continue our coverage of demonetization a year after the fact. We'll get you an interview with Kenneth Rogoff, author of Curse of Cash. That's coming up on the other side of the break as well.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
The 500 rupee and 1000 rupee currency notes will no longer be legal tender from midnight onwards.
On the 8th of November 2016, the Government of India announced that 500 and 1000 rupee notes would be invalidated. Overnight, 86% of the currency in circulation was cancelled. The goal? To deal a financial blow to the black economy. A year later, was it all worth it? Watch the demonetization experiment on the 8th of November with Ira Duggal, only on Bloomberg Quint.
Welcome back. You're watching Power Lunch. Let's take a look at the headlines at the half hour. Markets erase early gains to trade marginally lower. Oil marketing companies decline after crude rises to its highest in 2 years. Lupin stock falls almost 14% after the US FDA issues a warning letter on two of its biggest plants. A year after demonetization, Harvard economist Kenneth Rogoff tells Bloomberg Quint that he was surprised that the hit to the economy was not more severe. Indians use creative means to keep businesses going, says Rogoff. And former European Central Bank Chief Jean-Claude Trichet describes bitcoins as more dangerous than useful. All right, but let's get to the markets at the half hour. Pradeep is here with us. Pradeep, you cover both commodities and equities. How's the oil picture playing out through the broader markets and individual stocks?
So it looks like probably, the broader market is kind of worried about the oil prices indeed. I mean, why are markets really down today? If you look at it, dealers also tell us that there is a significant amount of hedging which some big investors have been resorting to. You can look at the India VIX moving up because of that. There is significant put buying that is really happening. And if you look at the sectors which have come to support, is just like a sector like an IT which is helping you out. There is no broad-based support which is coming in. There are more losers than gainers, and interestingly, whether you look at the index or the broader market, barring the first hour of trade today, we have seen a negative market breadth. Of course, Lupin warning letter has been another blow to this weak market, and it has also impacted some other pharma stocks like Sun Pharma, which is again closing, quoting at day's low. But Lupin has in fact gone to a 4-year low after this letter, so it has broken the previous lows that we had seen 3 months back, which is really a cause for concern. Well, some amount of interest is seen in PSU. That still continues, so there could be some relief. NBCC has gone up because of the Bank of America report, and then you have MMTC and STC also buzzing. You have a mid-cap stock like HFCL, which is kind of going up. But yes, there is concern more on the crude side, and the impact is also seen on Jet Airways, which is down. So aviation stocks are seriously worried about it. Then with disappointment, Just Dial has also fallen today because of the poor numbers. Although in mid-cap space, if you look at it, there are more good results than bad. But if you look at the reaction today, significantly the reaction is severe on the negative side. So we can say that over last 3-4 days, when market was kind of getting stuck, as we got closer to 10,500 mark, there used to be some selling, shorting, or hedging happening. Today, it seems that some momentum has actually got built up compared to what we saw yesterday and day before. I mean, the previous trading session.
Pradeep, quick thought on what crude markets are looking like and what the commodity traders are talking about. I think yesterday night, overnight, there was again an uptick. But we were speaking to Vandana Hari earlier. She doesn't think you would even move towards the 70 mark and then sustain there. she doesn't think so.
Yeah, so in fact, what has changed really over last week or 15 days is that some brokerages who were, as yet were not willing to revise their targets have now finally revised the targets for the next quarter to $60 or such levels. We saw BNP Paribas doing it and one or two more brokerages actually raising their targets for next quarter close to 60 level. They were all stuck at around 50. 52, 54 kind of level. So that's one revision. And second, what there is, the consensus among the experts and why the levels have really gone up is that the compliance has significantly improved. So the agreement happened long back, but the compliance was poor, around 70% or so. But the October numbers, which are formally or informally being discussed in the commodity circles, are above 90%. So 90 to 95% compliance is really significant among the OPEC countries. So looks like there is a significant support now building in. And if the ban is extended, and if you also extrapolate the kind of compliance to the production cut, and also Nigeria willing to participate in the cut that was so far out of the entire ban agreement because they had their own supply issues, which means the markets could really look tight. And in that backdrop, surprisingly, the US rig deployment numbers have also gone down. So that is another shock to the oil traders really, and that's the reason why oil has been holding on. I mean, for last 1 week or so, we have been hearing the oil analysts telling us that 60, 62 is kind of a ceiling. It will not hold on to this level. We'll soon see a reversal, but reversal is not coming in, for all these reasons. And there is definitely a shift towards, now people are actually talking about a $60 oil could be a reality and could be sustainable for the first time in last 2-3 years, I would say.
All right, so 60 we can still handle. When it goes to 70 is when the Indian economy starts to worry. Actually 65 and anything above that is not entirely comfortable. Pradeep, thanks so much for that. That's equity markets and commodity markets. So if oil is a downside pressure on the Indian markets, then global markets are actually providing a little bit of an upside. So if you just look at the Asian markets this morning and this afternoon, you've had quite a stellar run at the Asian markets. So the Japanese market, that's the Nikkei, actually closed at levels which is the highest since 1992. That's 1992, more than 25 years. So, the liquidity-driven upside that is coming in despite various concerns, various geopolitical concerns, that continues, the Nikkei being case in point. But Nikkei is not alone in the kind of rally that we have seen. You also had the Hang Seng close at its highest level in a decade. So a lot of these global markets are continuing to rally. And of course, that means that India is safe on the global front and is mostly reacting to domestic triggers, individual earnings, like, of course, and news points like Lupin, which came in just today. The liquidity-driven rally is also continuing to push the Bitcoin market higher, not something that equity traders may be looking at on a daily basis, but should be. That rally has perhaps outstripped anything else and beyond $7,000 in recent trade. But not all are convinced about the actual fundamentals of the cryptocurrency. Few even say that it should not be called a currency. Former ECB President Jean-Claude Trichet is in that camp, which believes that firstly, we shouldn't call it a currency, and secondly, that the benefits of these cryptocurrencies, if you want to call them that, the dangers outweigh the benefits. Hear him out.
Well, I have to say I don't consider at all that it is, there are currencies. I think that they have not one of the characteristics of the currency that is essential, and which is to keep its value on the basis of sustaining the value. Aristotle said what were the three characteristics of a currency, and keep the value is fundamental. You see very clearly that the Bitcoin goes up and down, up and down. It's clearly something which corresponds to a speculative instrument. But behind the Bitcoin, you have the blockchain concept. And there you probably have a disruptive new concept in, I would say, finance, or more generally in decentralized ledgers. So it seems to me that the problem is to adapt the blockchain to a number of other, I would say, domains. But again, these cryptocurrencies seems to me, as a central banker, something which is more dangerous than useful.
All right, that's the old school central banker saying that he's not thrilled with this idea of bitcoins and the way people are speculating on it. We're closing off regular power lunch. On the other side, we will bring you that conversation we promised. Ken Rogoff, I spoke to him a little bit earlier, late last week, in fact, to understand what he made of demonetization, how the year has gone by, and what he thinks the lasting changes in the Indian economy have been as a result of that. Thanks for watching. This day, that year, in this case, this day last year, India and its economy were hit by a shock. At 8:15 p.m., Prime Minister Narendra Modi addressed the nation, telling us that virtually all of our currency, 86% to be precise, would be invalid overnight. He explained this as the government's attempt to hit the black economy, dent corruption, and the menace of fake currency. The year since has seen many ups and downs. Good news that the economy may not have been hurt as much as some had feared. And bad news that almost all of the cash came back, which suggests that the stock of black money may not have been extinguished. Joining us to talk us through India's demonetization experiment, and that's the best you can call it, is Professor Kenneth Rogoff, Professor of Economics at Harvard University and the author of Curse of Cash. Professor Rogoff, thanks for joining us on Bloomberg Quint.
Thank you for having me.
Professor Rogoff, I want to just first take you back in time a year. As somebody who understood the nuances of cash and cash in the economy, when you first heard that India had overnight decided to extinguish 86% of its currency, what was your reaction? What were your first thoughts, sir?
Well, obviously, I was quite surprised. I didn't have any word that this was going to happen. My own plan for reducing the use of cash involves doing it very slowly and not to seize the currency out there, but just to make it more difficult to use cash to do large-scale transactions. I think that can be achieved. The trouble with doing a surprise attack, as India did, is the collateral damage is so much that you can't really squeeze out the black money. You can't, you don't have the time, you don't have the people to try to sort through everything. But I must say, a year later, it's been a bigger political success than I might have imagined. And if the Prime Minister continues to capitalize on that to try to root out corruption, to try to make the Indian economy more efficient, it could end up being judged a success.
Professor Rogoff, as an economist, can you sort of explain to us how this process works through the economy? You have a sudden shock which takes away a large amount of your cash in a cash-driven or a high-cash economy like India. Typically, how would you have expected it to play out through the economy, sir?
Well, you would expect that it would hit economic activity because India, although it's moving towards more credit and it's taken some very important steps that the rest of the world hasn't in financial inclusion, in giving ordinary people debit accounts, it's not there yet. So you'd expect economic activity, particularly in the informal economy, to contract a lot. As in the event, the Indian people seem to have been incredibly creative. In fact, it reminds me somewhat of when a similar event happened in the United States in the Great Depression. Franklin Roosevelt, the new president, closed the banks when he was elected in the early 30s. And people didn't have access to cash. They didn't have access to their checking accounts. And yet the Americans, too, were very creative back then in continuing to do their business. The Indian change was even more dramatic in some ways. And it's really a surprise the damage wasn't much more.
Professor Rogoff, before I come to how the economy has responded, so, whatever, few experiments with demonetization we have seen across the world, even in India way back in the 60s, all of them seem to be driven by a very specific purpose or a very specific problem that the economy had. In some cases, it was hyperinflation, for instance, in some of the African nations. In India, one could have argued that there was no pressing need to do something like this. Would you agree with that, sir?
Well, I do think there's a very strong case to move India towards an economy where there's more financial inclusion, where credit and debit cards and telephone payments are used more. I think it would help with tax collection, especially with the new gross sales taxes. It would help with reducing crime. It would help with reducing corruption. It's a question of how. I think the lessons from India are that all in all, it should be done more slowly. But it definitely something India needs as much as anyone, but it's very hard to do overnight. This is something that takes a long time, a lot of slow, gradual changes. Perhaps, again, this is something the Prime Minister understands the politics much better. The drama with which he did it, although causing short-run hurt to the economy, may have helped energize some of these changes in the long run.
Could the central bank, Professor Rogoff, have taken measures at the same time that demonetization was announced to sort of dull the economic impact? Some had suggested that maybe you need to encourage, flow of credit through the informal sector to make up for that period of time where there was a shortage of cash. To your mind, is there anything that could have been done which was not done, which would have eased the economy into this process a bit more?
Well, really, by far the big thing when you do an exchange of cash is you need to have the new cash printed to exchange for the old cash. But printing currency is very technical. You don't want to make it easy to counterfeit. And so they didn't have a big supply, a nearly sufficient supply of cash on hand. That was not the central bank's fault. That was a decision that the government made. They didn't want word to leak out that they were printing money. But the big problem that India experienced in doing it so fast, by far the major problem, was they didn't have new cash printed to replace the old cash. Once that took place, things were a lot calmer.
Professor Rogoff, a year later, we now know one thing, which is that 99% of the cash came back. To you, what does that suggest? And then I'll tell you what the discourse here is. But to you, what does that suggest that all the money that was extinguished has come back into the banking system?
I think that was very hard to avoid, because the problem is when you're doing something so dramatic that affects the economy so much, there's collateral damage going on all over. So in the end, the government isn't able to tediously check everyone as they bring cash back. That part of it's just not realistic. The real object should be to try to restrict the use of cash in the future, to make it more difficult to buy a house or an apartment, to make it more difficult to avoid taxes. And I think this is a step in sort of shaking things up, making people know that the government's committed to trying to restrict the use of cash. But I think the idea that you would be able to seize the black money is too optimistic. It is an old idea. An American, James Henry, who advocated this kind of idea in the mid-70s, suggested exactly that, for the United States to do things the way India did. In my book, I think that just won't work, and I recommend going very slowly. So I don't regard that in itself as a huge defeat, although, of course, from a public relations point of view, if the government had said they would accomplish that, it is. They say they will still be able to identify bank accounts. They'll still be able to root out some of the black money that found its way into the banking system. I don't know the technical details of that.
Professor Rogoff, what they are attempting to do now is, the income tax department seems to be scrutinizing a lot of the cash accounts, etc., to see whether some of this money can, be weeded out. Would you advise against that? It seems like some would fear it's becoming a bit of a hunt for a needle in a haystack, which you, lost somewhere along the way.
Well, I simply don't know the technical details. It's probably helpful in the extent that you want to discourage this kind of activity in the future. You want to make people more nervous about doing big transactions in cash, make them worry what might happen in the future. So perhaps from a long-run sense, it's helpful. But again, I don't know the details. It's very hard to do this in a detached, balanced way. There are places I know in other emerging markets which have had some success in looking at transactions, in looking at how money is flowing in and out of the banking sector. So perhaps India will as well.
Professor Rogoff, you talked about the longer run objective being to sort of reduce the use of cash in the economy, not just the stock but also the flow. So now we've seen a scenario where a bunch of sort of digital payment options have been launched. We have not gotten to a point where you've made digital transactions much cheaper or perhaps more easily accessible beyond a point. There were some suggestions that you need to bring in a banking cash transaction tax if you want to actually reduce the use of cash. But there was a pushback against that. To your mind, what's a better route to go? Make digital cash use easier, or to disincentivize the use of physical cash through things like taxation, etc.?
No, I think you have to mainly improve people's options, improve financial inclusiveness. I could imagine having some kind of tax for very large bank deposits in cash. That would be a small step. But I think the main thing is improving people's options. And again, India has gone far beyond many other emerging markets in the Aadhaar system in providing people in principle access to debit cards and credit cards. That was done initially under the Congress Party, but I think Prime Minister Modi has advanced that quite a bit. There's obviously some civil liberties issues surrounding that with the biometric information the government collects. But by and large, I think India is at the cutting edge, and many other countries will follow what India is doing. But it takes time. This isn't something you can do overnight.
One of the good things, Professor Rogoff, has happened, some would argue, is that very soon after this demonetization, we implemented the goods and services tax in terms of curbing the flow of black money. So, you tried to attack the stock of black money and then curbing the flow of black money. Perhaps that taxation reform will go a long way, would you say?
Absolutely. I mean, the goods and services tax is a phenomenal change in India's federalism. It's really a new pact between the states, and it offers the finance ministry many more ways to try to root out tax evaders and to root out corruption. It's a big step. And they argue, the finance ministry, the central bank, argues that the demonetization will work in cooperation with the new GST tax. Again, I don't know all the details, but we have to remember there have been many, many dramatic changes that India has made in recent years towards modernizing its financial system, towards trying to reduce the size of the informal economy. And I think by and large, these are going to provide an anchor for India to grow faster in the future. The International Monetary Fund, in its recent report, the New World Economic Outlook, highlighted that, yes, there's been somewhat more of a slowdown in the economy in 2017 than anticipated, but they expect the changes in these policies to really help over the longer term and to raise India's longer-term growth trajectory.
Professor Rogoff, on the flip side, there is a view, and Raghuram Rajan, our former central bank governor, who's now back in the States with you all in the academic fraternity, said that, you have to be careful about transitioning the economy from a large informal segment towards the formal segment, because you will see a lot of businesses not being able to tackle that transition into the formal sector, and that could lead to supply shocks in the economy. Do you think that that's something that needs to be watched out for? Are there, to your mind, any measures one can take along this journey to, again, smoothen out the transition from informal to formal?
Well, I think the main point is you need a very slow process over, a decade or two. It's not something you can do quickly, but it's going to happen simply because the transactions technology is changing so fast. It's improving so much. There are countries like South Africa, Kenya, which use mobile payments more than in the United States, where they're transitioning out of a cash economy very rapidly. But it's something you want to do largely with the carrot, not the stick, as much as possible, giving people other options, giving them attractive other ways to do transactions. But you just can't do it overnight. It has to take a long time. People have to be able to make adjustments, and businesses. But they will. I mean, I think there's little question that if we look 20 years ahead, India will not be a cash-driven economy. It will have changed. The question's how to get there.
Professor Rogoff, on the cash side, the one sort of question that remains unanswered is why we have this cute currency system where we have 100 rupee notes, 500 rupee notes, and then we have a very high denomination 2000 rupee note. And I think in your book you talk about the fact that the idea is to bring down the denomination. So we haven't really managed to do that.
No, I must say the large denomination notes in India were not that large to start with. So the largest note at the time of the demonetization was only $15. My book talks about, getting rid of bills, $50 and $100 bills, maybe in 10 years, $20 bills. So yes, India's gone in its own direction. But on the other hand, I do think it has sent a shockwave through the system. People are more concerned about using cash. But no, India's followed its own blueprint in this. It's not been done in a way that really others have tried or necessarily recommended.
A couple more questions, Professor Rogoff. One is, we have seen since demonetization an increase in digital transactions. We have also seen greater flow into financial assets. Now, the question there is whether this was a one-time impact, both on digital and particularly on the flow of money into financial assets, because, money came into bank deposits and that seems to have gone into financial assets. There's nothing to suggest to us that behavior has changed, that cash usage has reduced, or that the propensity to go towards physical asset investments has reduced. But I guess it would be too soon to make that judgment. Would you say that judgment would take perhaps at least a couple of years?
Yeah, I think it'd be a few years, 3 years, say, before we really have any idea of how this has gone. There are many other long-term trends taking place, but no, people don't change their habits overnight. This has shaken up the system. It's had a psychological impact, but it's not going to that rapidly accelerate things. On the other hand, the government has a lot of measures like the new gross service, the new sales tax that it's put in place that will affect things. But no, things don't change overnight.
So then a last question, Professor Rogoff. At this one-year milestone, how would you describe India's demonetization experiment?
I would describe it as part of a larger program of changes to try to modernize the Indian economy, to try to reduce the size of the informal sector, and to try to create a greater federal India that are going to be a success and plant India on a stronger growth path. I don't think other countries are going to imitate the exact way that demonetization was done in India. There's some lessons to be learned, despite the fact that, from what I can see from a distance, it's been quite a political success.
Would you hold on to your view that don't try this at home, emerging markets, which was one of the first comments you made after this was announced?
Yeah, that is what I say in my book. I recommend this as a policy for advanced countries first, emerging markets to be careful, although I've had pushback from a number of political leaders in emerging markets who tell me the corruption problem in emerging markets is much, much greater than in advanced countries, and finding ways to fight corruption is absolutely at the top of the list. And you shouldn't underestimate the importance of reducing cash usage for emerging markets also.
All right, Professor Rogoff, perhaps the view on this will continue to evolve as time passes. Thank you so much, Professor Kenneth Rogoff, for speaking to Bloomberg Quint.
Thank you for having me.